All right, welcome back. Invest Info, episode 19. Um, this week's topic, we're going to be talking about buying when others are fearful. And in the midst of this election, so much uncertainty of what is going to happen has caused not just the US stock market, but global stock markets to plummet. There's a lot of fear. If you look at the VIX and also any ETF that's leveraged in a bearish position, they've increased over 20% past weeks, and it could get worse. This is where we, as seasonal investors, see opportunity, right? So you see, I have quotes from guys like Sir John Templeton, who invested $10,000, which at the time, 10,000 adjusted for inflation today is 400,000. He took out a loan for 400,000 and bought 100 companies on the verge of bankruptcy in World War II, and turned that into a fortune, right? And he said the time of maximum pessimism is the best time to buy, right? Because, for us to get these wonderful businesses that we understand and know, when a business is wonderful and it's doing really well and you understand it, it's not going to be cheap, right? So for it to get to the price that we like, we're going to need some type of crisis, some type of fear. And with COVID, lockdown, the presidential election, riots, protests, all the ingredients are there to create buying opportunities, like companies like Twitter that fell 20%. I mean, I'm not saying buy Twitter, but just one example. I'm just looking at the markets like, wow. We can't invest based on what we see on the news, right? We have to invest based on our facts. It's not so much about being contrarian, right? Because if you listen to CNBC and try to invest, you're not going to make any money because those guys, they could be paid for. They don't have any stake in the game. A lot of those advisors on CNBC can't invest in the market, but they can be bought. Jim Cramer, he said that you could pay analysts and people on CNBC to, if you have vested interest in shorting the dollar, shorting the market, those guys could be bought and paid for. So we have to take the news out of our thought process of when we're going to buy our companies and look as the fundamentals change. If it didn't fundamentally change, then we shouldn't be getting caught up in the hype, right? Let's do numbers, right? Okay, so of the past Q3, the third quarter, of the 65% so far of companies that have released their earnings, 85% of them have beat their earnings, right? And the GDP went up 33% in the United States. So I'm just throwing the news out and I'm just looking at numbers, right? And this is great buying opportunities, as almost as good as March, right? But again, just because it's simple doesn't mean it's easy. It's very, if I tell you, look, you have to just, if you want to lose weight, go in the gym, work out, and diet and exercise, it's simple, but it's not easy, right? Not many people could do it. So, not many people have the emotional fortitude to be invested in these companies as they're falling, because guess what? They could keep falling. And there's no telling if things are going to get better anytime soon, right? So, our concern really is just buying $10 bills for $5. You do that enough times, you'll get wealthy, as Warren Buffett says. Now, I don't have Warren Buffett here, but he also said, buy garbage when there's blood in the street. Baron D. Rothschild also said the same thing. Buy when there's blood in the streets. It says the time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. Right, when everybody is greedy. Buy when others are fearful. Be greedy when others are fearful, and fearful when others are greedy. So this thing could drop even more. The global markets could drop even more. Fear could increase even more. But as seasoned investors, we should have the emotional fortitude to buy the companies we understand at a margin of safety price. And this crisis has created that. John D. Rockefeller says, always try to turn every disaster into an opportunity. These guys were tycoons and great investors, right? Throughout history. These are some of the names that I've named. And they really get their wealth in times like this. On average, the stock market is only bearish every 6 years. The last time it was this low, like the last stock market crash was over 11 years ago. So these opportunities don't come by often, right? So seize it. It says, John D. Rockefeller also says, the way to make money is to buy when blood is running in the streets. And if you're in the markets, any market, global market, even gold, even, I was surprised to see that. I thought, I'm looking at the gold leverage ETF, three times leverage bull ETF, which means, gold will go up. And even that went down. Like the bearish version went up. So it was just so much fear in the market, and our job is not to get caught up in the hype. Don't get caught up in the news. We see something we understand is on sale, we're just going to buy it. Doesn't mean that everything is going to turn around good right away or anything like that. We're just buying things on sale that we understand at a margin of safety price. And there's so much opportunities, so much companies. I mean, you look at a company like IBM is back down to March prices, right? DraftKings was up $60. Now it's trading at almost 38. So these are huge buying opportunities, guys. And someone also in the Invest Info page that we have posted talked about dark pools and how there's millions of dollars being invested into puts. We don't know if it's hedge funds are doing it, but SPY puts, right? So that's also gonna drive the market down, and these types of things. Look, the market in the short term is a voting machine, but long term it's a weighing machine. So fundamentally, a stock should return to its intrinsic value. So the opportunity's here, guys. Now's the best time to buy. I'll see you on the next one.